Hello guys, good day once again. Welcome back to my channel. Now this is episode 6 of our candlesticks pattern study. This is episode 6. So if you haven't watched the other episode, then I'll urge you to go and watch them before you even watch episode 6 of our candlesticks pattern. Now our journey, we are going through a journey of understanding the fundamentals of the financial market. So we want to understand the language of the financial market, of the forex market, and of the crypto and the stock exchange market. Yeah, this is the knowledge that we need in order to be able to analyze the market like a pro, analyze the market like a professional in order to be able to take trade decisions. Guys, if you are new on the channel, make sure you subscribe and then you turn on the notification bell icon so that you'll be notified whenever I share a content. And if you are seeking to understand, you are seeking to learn from scratch to understand everything about forex, then guys, this is the right channel for you. Make sure you share the video to someone who wants this or who needs it, and then don't forget to strike the like button. Leave your comments also in the comment section and I'll attend to it as swift as possible. If you want to follow me on all social media handles, to check in the description, you're going to get it. You're going to get a link to my social media handles. And then the last thing, I recommend two brokers, that is Exness and then Deriv. Deriv is one of the amazing brokers. It has um, different financial instruments. You have a lot of them that you can trade from synthetics to forex to stocks to crypto. You can trade different hybrid assets. All right, guys. So let's move straight into episode 6, um, which is the morning star candlestick pattern. We are going to learn about the morning star candlestick pattern, and then we want to look at the psychology behind the formation of this candlestick. All right, the psychology behind the formation of this pattern, guys. So let's delve right into it. Okay, now first of all, let's look at the characteristics of the morning star, or the features of the morning star. When we are done, then we'll look at the psychology behind the formation of this candlestick, and then the next thing we'll look at is the next line of action when you see such a candlestick pattern forming in the market. And also we want to consider the area in which is forming, which is going to be another factor of confluence in order to be able to take our trade decisions, whether we want to buy or sell the market, guys. So let's delve straight into it. Now the candlestick, or the morning star candlestick pattern, is made up of three different candles. It's typically made up of what? Three different candles. You are going to see a bearish candle. Okay, you're going to see a bearish candle. You're going to see the next candle you're going to see could be a bullish, it could be a bearish candle, but it's going to be a small candle. Okay, it's going to be a small candle. Then the next candle that forms is a strong bullish candle, in which the close of the candle is above, okay, it's above this, it's above the middle candle, or sometimes it's even closes above the open of the previous bearish candle. So take note of the fact that the morning star candle is made up of what? Three different candles. All right. Sometimes it could be four. Sometimes it could be four. But the typically, okay, it is made up of three different candlesticks. The first one is what? A bearish candle. The second one could be a doji candle. It could be a candle with a small body. And then the next candle that confirms the formation of the morning star is a strong bullish candle that closes above the bearish candle. Okay, it closes sometimes halfway or even above the opening of the bearish candle. Yes, so always take note, the middle candle should be a small buying pressure, which is a small candle. It could be an indecision candle. We shall look at some of these examples on the chart. All right, so let's look at first candle, which is a bearish candle. Second candle could be a bullish or a bearish candle, but it should be a small candle which indicates a small selling pressure, all right, or it should be a dodgy candle which is an indecision candle. Then the next candle should be a strong bullish candle, all right. Now, what kind of pattern, okay, is the morning star candle? Now the morning star candle is a bullish reversal. Is sorry, is a bearish reversal candlestick pattern. It's a bearish reversal candlestick pattern. It means that when you see this type of candlestick forming, it tells you that the market is about to what, to change direction depending on where it is forming. If it is forming at the end of a downtrend, then it tells you the market is about to change direction to the what, to the upside. We shall look at trends of market or market structure. When we get to market structure, we shall talk more about market trends. All right, so let's look at the psychology behind the formation of this candle stick pattern. All right, so first of all, you realize that the bears, okay, the bears are in control of the market. They pushed price all the way down, so you can see a strong selling pressure, all right, which tells you that the sellers are in control of the market. Then after the close of this candle, the next candle that formed was also a bearish candle, all right, but you could see that the bears could not push the price down further, okay. As compared to the first candle, you could see this was a strong selling pressure. The next candle that came was the momentum, okay, the momentum could not continue. They could not continue with the strong selling pressure. So you realize that the next candle that formed was a small selling pressure. The selling pressure could not continue, all right. Then the next candle that formed was what, a strong bullish candle that's even closed above the opening of um the previous bearish candle, which tells us clearly that sellers lost their momentum. Okay, they lost their momentum, and then the bulls took over the market and they pushed price all the way up. So it tells us, the Morningstar tells us clearly that the bulls have taken control over the market, or the buyers have taken control over the market, and we should expect price to go up once the bulls have taken control over the market. We are expecting price to go up after the formation of what, the morning star candlestick pattern. Now let's explain it in another way. All right, so in another way, it is not always that you are going to see the middle candle to be a small selling pressure. It could also be an indecision candle. So in this scenario, let's look at in a situation where the middle candle is an indecision candle, which is a dodgy candle, right? So you have the first candle, which is a strong selling pressure, or a bearish candle, which tells us clearly that the bears are in control of the market. They are pushing price all the way down. Now, after the close of the bearish candle, the next candle that will form will be an indecision candle, which tells us that the sellers or the bears are losing the momentum. They are losing their momentum of pushing the price downward further. Now, after the formation of the dodgy candle or the indecision candle, all right, we will now confirm the formation of the morning star when we see a strong bullish candle. All right, so first of all, there will be a bearish candle. The next candle will be an indecision candle, which tells us that the sellers have lost their momentum. Price was not able, they were not able to push the price down further. Therefore, the buyers took control over by the formation of a strong bullish candle. Now, the moment we see this in the market, we see this candlestick pattern in the market, it tells us clearly that the bulls have taken control over the market, and they are what, prepared to push the price up and up and up. All right, so the morning star candlestick pattern is a bearish reversal candlestick pattern. When you see this, it tells you that what, the bears have lost their momentum, and bulls have taken control over the market, and they are prepared to move the price up. So as a trader, when you see such a candlestick formation, you should be prepared to look for an entry for a buy. You should prepare to look for an entry for a buy. And I've said in the previous episode that we don't use just one candlestick pattern to take trade decisions. You combine other factors of confluence. It could be support and resistance, could be trend line, it could be all the other factors that you can consider in addition to your confluence in order to be able to take your trade decision. Guys, now let's move on to the chart to see if we can find Morningstar candlestick pattern. We want to see examples on the chart and see if indeed what we have said is true. All right, so let's look at the chart. Let's look at the chart if we can find some Morningstar pattern, and then we will look at the next thing that followed. Just be patient as I search through the chart. There should be a lot of them. Let me go to let me see this one too. Let's check it out if we can find some Morningstar. Okay, let's consider this. Let's consider this very candlestick pattern you are seeing here. Okay, let's consider this very candlestick pattern you are seeing here. All right, so let's consider these three different candles here. All right, this three, that's bearish, bullish. All right, this could be an example of a Morningstar candle. All right, so you realize that the first candle was what? A bearish candle. Let me enlarge this for you to see it well. Okay, I think I must put some. I want to make it in such a way that you're going to see these three candles I'm talking about. Okay, so the three candles in this rectangular box is what I'm talking about. All right, guys, this is okay. Good. Now let's look at these three candles. That's the bearish candle, and the bullish candle. This is an example of a Morningstar candlestick pattern. All right. So first of all, you realize that the first candle was a bearish candle, which tells us that price was going down. The next candle was also a bearish candle, but we realized that price could not push down further. Price could not push down further. And the next candle that formed was strong bullish candle. Okay, strong bullish candle, which tells us that buyers have taken control over the market and they are prepared to push price up. And look, lo and behold, look at how price moved up from here after the formation of the Morningstar, which is a bearish reversal candlestick pattern. Sorry, I said bearish reversal, bullish reversal rather, because price is about to go up. All right, so it's a bearish reversal, but it's a bullish candlestick pattern. Okay, it's a bearish reversal, but it's a bullish candlestick pattern, which tells us that after the formation of this candlestick pattern, price is going to go up. And lo and behold, look at how price would move all the way up from this bottom. Okay, the subsequent days that followed, price moved all the way toward the top side. All right, now don't forget that this is a daily time frame. This is a daily time frame, so all the candlestick you are seeing represent 24 hours. All right, so after the formation of the Morningstar, we had we had the bulls pushing price all the way up. Now let's see if we can find other examples. Let me change the time frame to let me change the time frame to 4 hours so that we can have a lot of the candlesticks. Okay, so let's see. Good. Another very good example here. Okay, good. So this is a typical example of what I was talking about. That is the Morningstar. Okay, let me use this. Let me Do it well for you. Good. Good. So this is a typical example which has the indecision candle as the second candle, right? So guys, look at this. You realize that the bears were in control of the market. The sellers were pushing the price down. Look at how strong. Look at this strong bearish candle. That's the first candle in the pattern. Okay, look at the strong bearish candle. Now it tells us that the sellers or the bears were in control of the market. They pushed price all the way down, and then the next candle that formed was an indecision candle, meaning that the bears lost their momentum. They couldn't push price down further. Okay, then the next candlestick that formed was what? A strong bullish what? Candle. We can equally say this is a strong engulfing bar candle, which tells us clearly that what? The bulls have taken control over the market. Okay, and they are prepared to push price up. Guys, look at after the formation of what? This morning star, which is what? A bearish reversal candlestick pattern or a bullish candlestick pattern. Okay, a bullish candlestick pattern. Look at how price moved up from this after the formation of this the candlestick pattern. Look at how price moved up with a high momentum. Look at price moved up straight non-stop. Okay, that is non-stop, moved up from the bottom all the way up. So as a trader, when you see the formation of this morning star, okay, you should be prepared to what? Combining that with other factors of confluence, you should be prepared. You could see that this more candlestick pattern was forming on a what? On a support. Okay, and look at how price moved up. So if you are a trader and you say this, it's an advantage for you to what? Find an entry for a buy to join the bulls to what? Push the price up, and then you make some profit from there. We can search and search. Look at we have another one here. You can search on the chart. You see a lot of them. Look at after the formation of this morning star. Okay, look at how price moved all the way up. Price moved all the way up from this bottom to the upside. All right. Yes. So that is how the morning star candlestick pattern works. Yes. So we shall look at the next one, which is the evening star. The evening star is directly opposite to the morning star. We shall look at that one as well. Make sure you are following closely as we learn to what speak the language of the financial market. All right, guys, I will see you in my next episode. Make sure you are following closely. Make sure you are not losing out on any of the episodes because each of them is really important. We learn all of this, we combine them, and then we become solid to be able to analyze the market. Thank you so much. I'm going to see you in my next episode, which is episode 7.